And that means we are live here on YouTube, 3/12/2019, and got a lot going on in the markets here today with the Brexit vote and Boeing selling off again following yesterday's gap. But let's just start with some pleasantries. How you doing today, Matt?
Tim, doing a lot better than the people who support Brexit.
Yeah, Brexit is going to be an interesting deal here today. I know you've been watching 2 or 3 hours of parliamentary debate there this morning, Matt. What is going on with that Brexit deal?
I'm one of the weird people who gets all geeked out with politics, and I actually enjoy watching the debate unfold. So when the U.S. is debating, the tax code, I'll log in and I'll watch. When the U.S. is debating healthcare or whatever it is, important votes, I'd like to log in and actually pay attention to the arguments going for or against. And some of it is just because I'm interested in politics and whatnot, but a lot of it is I'd love that type of debate. And, so with Brexit today, I woke up this morning, I checked Twitter, and I noticed on Reuters, they were streaming the UK parliamentary debate regarding Brexit today, and they have that all-important vote coming out later on today. I believe it's in about 2.5 hours from now. And it's just fascinating, Tim. It's just so fascinating to watch that unfold in real time. And, nobody really knows what's going to happen. But let me just kind of give you my opinion on this, what we'll see later on today. I fully anticipate Brexit vote to be to not pass today in the UK Parliament. And, there was word last night that came out that Theresa May had renegotiated certain portions of the deal with the European Union regarding the border, the border stop issue between Northern Ireland and the EU country, the Republic of Ireland. And that has been such a touchy issue for 2 years now. And so word came out that, yes, they have renegotiated something regarding the border dispute. And then, this morning, it comes out that the Attorney General of the UK, Cox, says, nope, it does not change the legality. Whatever Theresa May said does not change the issue regarding the legality of what is going on. And so that just kind of gave the people who were proponents of Brexit, it just kind of took away a lot of their momentum. And so, when you're looking at the hard numbers, we did this 2 months ago in January when the vote came out. It was 432 to 202. And if you'll remember, Tim, when we were discussing that, the margin was anywhere between 80 and 100, and it got just absolutely annihilated by 230 MP votes. So has Theresa May negotiated enough with the EU to change that dynamic? And I just don't think that that's the case. And so it's going to be interesting to see where the margins are later on today with the vote. It's going to be interesting to see what happens next with Brexit. But Tim, I'm increasingly seeing a path, and I'm not sure I saw this path before 2019, but I am increasingly seeing a path that the UK stays within the European Union. And that's why it's so fascinating. That's why it's absolutely so fascinating.
Yeah. Well, the U.S. market doesn't seem to care, by the way.
No, they don't.
For a long time, this Brexit vote conversation was always posed as one of the biggest risks to stock prices, Matt. In fact, I read a lot of analysis about it, how it could affect trade, it can affect relationships, it can affect this and that. But the market doesn't even seem to be concerned about it too much. Do you think that we're underpricing risk here? Or do you think...
I think we are a little.
Mm-hmm.
I think we are a little. But to be honest, I mean, we're now 2.5 years into this discussion. We kind of know where we stand. I mean, so I don't think the market is really caring about it. Maybe they start caring if the margins are, within a certain range. But as of right now, Tim, I mean, the market's up, a little bit today on some positive economic data that we'll talk about in a little bit. And the market literally, I mean, ever since January, the market hasn't even been discussing Brexit in America.
Mm-hmm. Yeah. It's going to be interesting one way or the other. I think you said 1 o'clock our time is when the final vote comes in. So the market will still be open.
Yeah, 2 hours and 20 minutes.
Market will be live.
We'll see the market reaction.
For sure.
We will see that market reaction, no doubt.
S&P 500 up just a hair here today, less than 0.5%. Whenever we're up less than 1%, I always call it kind of another day at the office, Matt. This is a low range candlestick. The ATR on the S&P, what is the ATR right now? About 27?
ATRs right now, it moves about 1% a day right now.
And the R today right now is about 17. We're having a low range candlestick with the Brexit vote. Obviously, it could expand later. We're carrying through a second day of the buy the dip retracement mentality. You expect a breakout as we're approaching the highs here?
I think it has much higher probability of breaking out now than it did, say, a week or a week and a half ago when you were high basing it. And it's just, it comes down a little bit. It picks up some steam. The buy the dippers come in, and it's really kind of on the backs of some positive economic data. And we'll talk about some of the inflationary data, which is going to give the Fed even more ammunition to remain patient. So the data we saw today was positive and whatnot. But you are looking at a potential breakout here. I still think we got to break out of that 2820 before we actually confirm it as a breakout. But you are approaching that very, very important 2800 zone. From an intraday perspective, if you drop this down into a 15-minute chart, you can see how the market overnight selling off a little bit, coming into the cash open right here. You see the market appreciate coming back up into that 2800 level. And then you see the consolidation happen here. And this is really normal at this time frame in the marketplace, where you see movement coming into it, and then you get into the midday lows when it gets into that lunch hour in the east, and you see this consolidation. And we could see this consolidation all the way through the Brexit. But you do have some interesting day trading opportunities if you can break out of that base here at about 2802.75. So if you're a day trader, you're looking at that level saying, all right, I'm not going to touch it within the range here. I'm going to wait till it breaks out of that range, and then you have a very easy price target. If you break out at 2800 on the intraday perspective, you easily have a price target in that 2810 by 2820 level. And so you do have a little bit of resistance intraday over here at 2810. You also have some major resistance over here at 2820. And not only is that 2820 level a intraday resistance level now, but Tim, remember, it is massive resistance over here when we saw the market in November and December. So from an intraday perspective, you can certainly play the breakout intraday, but from a swing trading or a position trading standpoint, at this point, if you didn't pick up that dip off that retracement at 2750, 2760, 2770, you really got to be patient and wait for that breakout now.
You know, there's quite a few stocks running today. Obviously, a lot of the oil companies are. Diamond Offshore is the number one gainer on the S&P 500, Matt. And this one's an interesting reversal pattern.
What's Diamond's?
DO.
That's right.
Yeah, you got a little bit of a quadruple bottom developing here. It's not confirmed. We're not in an uptrend, but it has reversal characteristics. You can feel the moving averages rolling in here. Got a little pivot point relationship compressing. When you see a pattern like this, do you get interested, watch list it? What's your take?
Well, you know, Diamond Offshore is not a company I invest. It's not a company I trade, so I'm not that familiar with the company. But if you are of the interest in Diamond Offshore and you are looking for an opportunity to get into Diamond Offshore from an investing perspective after this massive crash you saw last year in Diamond Offshore, I mean, we're talking about a 55-60% decrease in price over the course of the last 6 months. So obviously you never pick up the falling knife as it's going down. You wait for it to hit the ground and slow down, and that's what's happening with Diamond Offshore right now. So the only question that you have from an investor perspective is, when do you do it, right? What breakout do you play? Do you play the breakout of 11, or do you play the breakout of 12? And that's just a conversation and a discussion that individual investors have to have regarding where they trigger into an investment after a reversal. And for me, if you're aggressive, you could certainly play the breakout of 11. But if you're more conservative and you really want to see this pattern confirm and start to show some momentum, you wouldn't play the breakout of 11. You would play that breakout of 12. And the reason you would play the breakout of 12 is not only is this a resistance level here, but it's also an old support level there. So the likely scenario here is it breaks out of 11, hits its head on 12, comes back down a little bit, retraces, and then plays the breakout of 12. So that's how I would approach it if I was interested in Diamond, which I am not.
Take a look at WHR.
I was going to say a tackle 25 that has a little bit easier trigger is rig.
Yeah, dirty, sexy money here on rig. Yeah, That's the exact same thing I was talking about on Diamond Offshore here, Cody, where you have this old support level here at 9. You have the consolidation between 8 and 9, and it's perhaps breaking out of 9. And Rig, Rig was a tackle 25 stock back in 2016 and 2017, I believe. Really good cover call, cheap stock, really good for cover calls, got the volatility necessary to get you a nice little 3.5% ROI. It's not fundamentally strong enough to be a tackle 25 stock, and that's why it's dirty, sexy money.
Mm-hmm. You're seeing pretty good volatility and movement in like oil and gas refining, oil and gas, integrated, but you're not getting it out of leadership, out of like Chevron and Exxon. I don't know if that is telling me something or just because they're just bigger and they're not running as much. But the oil markets, the energy stocks, they're all pretty hot here today, moving. Valero here is one of the most interesting companies in this entire sector, Matt, kind of running here as well.
Yeah, well, when you said servicing, I always think Valero. That's just why I looked at it.
Another company that's, on my radar today is WHR Whirlpool. I don't trade this company all that often, but when it hits the top performer, retracement and kind of running, we're below a moving average here. When you come into a moving average zone here, Matt, this was a deeper retracement. Do you now see that as a catalyst you have to trigger above, or did today's candlestick trigger?
Today's candlestick did trigger. You absolutely you would have to call that confirmation, but that doesn't mean that you just put your order above 10% of the high and let it fill. You got to look at the other levels now too. So I would definitely call this confirmation off the bullish retracement. However, if you drop this down into an intraday chart, you do have some intraday resistance levels at 141 and 143 that you have to concern yourself with. And as you can see, the market is price appreciation. I want to buy even though I am technically calling this confirmation, you want to buy this right now after it's already moved up as aggressively as it has today from an intraday perspective. So if I was looking to get into Whirlpool from a swing trading perspective, I would actually wait for the intraday retracement coming back down into perhaps 139 before I triggered into it if I wanted to be aggressive. If you wanted to be conservative, and there's always multiple ways to get into things. There's not just one or two or three. There's many different ways. Every trader has their different process. But a lot of times when I'm looking at this right here, and you're right there at that 20-day moving average at 140.75 in that level, I would wait for it to get back up above, reclaim that level, and that would show me a little bit of momentum going into it.
Got to take a look at Chipotle. They had an announcement that they were partnering with Venmo, and CMG has just taken off. I mean, it has been a juggernaut since the runaway gap here, Matt, breaking into new highs, consolidation, little pinch, and now we're breaking out here again. Obviously, this was on our report a couple of weeks ago. I don't remember where our profit targets were. As a matter of fact, Cody, maybe look those up for me. What's your read on Chipotle, though, Matt?
Oh, bullish breakout of 625. That's bullish.
Yeah, definitely. Would you?
Off the top of my head, I believe they were 240, 260.
240, 260, or 640, 660.
640, 660.
That's what you meant there.
Yeah, 240, 260. That's
we're not shorting it.
No, but it's very, very strong. Very, very strong. And that breakout is significant. And this is a company that is not for the faint of heart. You do not trade this company if you are a little cautious or nervous about risk. This is a company that is a high flyer that will absolutely drive, and both ways, up and down, both ways. It works both ways. So, but that breakout of 625, I think, is absolutely a solid breakout.
Mm-hmm. The biggest loser on the S&P today is F5 Networks, FFIV. They're down on heavy volume and a gap below support, sitting on the 150 handle though. So it's kind of hard. I'm looking it up right now. It's non-earnings related, obviously. Yeah. And so it says F5 stock falls as pricey software application gets mixed analyst reviews. So the analysts must not have liked one of their releases here recently. Software has been under some pressure in different spaces, Matt, specifically the gaming software stuff. When I see a stock breaking below support on volume, I'm going to watch list it. It's not tradable today, though, I don't think.
No, I don't think it's tradable today, but I mean, if you look at that potential breakout of 150, which is obviously a support level over here, it's a resistance level over here. You have a lot of momentum to the downside, obviously down 11 points on the day, 7.3%. It hit that support level at 150, a little bit of short term, just probably covering right there. I don't think anybody's picking up the dip on this. But if you look at this on the weekly chart here, Tim, you see perhaps a very, very significant breakdown when you have massive resistance over here at 150, obviously resistance over here at 150, support over here at 150. If you can clear that 150 channel, you should have smooth sailing down to 140 by 130.
Mm-hmm. Yeah, definitely on the big picture, that is breaking down on some heavy volume and news that was non-earnings related, which almost makes it worse, by the way, when you see gaps like this.
Does.
Yeah. Yeah. And we literally have to just talk about Boeing probably every day. Obviously, just
we have to. I mean, how do you not?
It's not a fun conversation. There's no doubt about it. But obviously, when they're grounding planes around the world, and you've got real concerns about the fundamentals. And Matt, really, and I think you and I were talking about this before, and it kind of expresses the sentiment around Boeing. We don't understand what the risk is right now.
No, that's the biggest problem, is we don't understand what the issue is. And if we can't understand what the issue is, it's really hard to analyze what the problem is. There are so many uncertainties with what is going on. And in the single plane crash, I mean, those uncertainties really don't really kind of, from an investor trader, it's just a plane crash, and it's unfortunate, and it's a human tragedy, and it's sad, and your heart goes out to the people impacted. But when you have two plane crashes of a brand new plane that are very similar in what happened in the flight takeoff scenarios, and there's concern over maybe this is a mechanical issue, or if it's a human issue, or if the human issue doesn't understand the mechanical issue or the technological issue, there is so much uncertainty. But here's what we do know. We know that China has grounded the planes. We know that Singapore, the UK, Australia, Malaysia, Oman, Mongolia, Ireland, and France, all of them have grounded those 737 Supermax planes. You now have 40% of that fleet, which, I mind you, is probably Boeing's #1 plane on orders, not just the 350 that are in fleets right now, but thousands upon thousands of planes that are on back order. And there's real concern regarding the revenue and the guidance and the forward guidance for Boeing with how this is going to play out. Now, again, this is a lot of uncertainty, and that's why these planes are getting grounded. Boeing, to its credit, came out today and said, we are fully confident in our fleet. We are 100% fully confident in their fleet. But what I would say to Boeing is the market is not fully confident in your fleet, because Boeing is now down 30 points on the day. It's down 7% on the day. And now you're coming into that same type of support level that you had the kiss off of yesterday when it came and hit this old resistance level at 170. Now you're kind of kissing on that 170. And I'm just going to say exactly what I said yesterday, that Boeing should not be touched by anybody, not short sellers, not buyers. This is a company that in my opinion, I am not going to even trade until we start to see clarity, not regarding the technical condition of Boeing, but regarding the fundamental and the variables that are out there with Boeing. So it's a absolutely tragic situation. And my heart goes out to those individuals impacted on that. But from an investor and trading perspective, I could not imagine me saying, okay, I'm taking this trade right now. There's too much uncertainty.
I don't think you can touch it one way or the other until we get more clarity, quite frankly.
And I agree. I fundamentally agree with what Dustin says in the chat. They should ground every one of those planes until they figure out exactly what is going on with those planes, because we cannot put revenue above human. We can't do that. And I'm a little upset with Boeing, a company that I really, really, really like, a company that I have invested and traded many, many, many times. I'm a little upset with Boeing for not putting out a little bit more aggressive statements, because I do believe that they're putting revenue above the human condition right now, given the uncertainty that everybody is fearful of right now. And I'm not just talking investors, I'm talking flyers. Flyers are concerned with flying those Boeing planes.
Mm-hmm. Listen, there's a PR nightmare here, obviously, and trying to get in front of it would be a very smart thing to do. I mean, what they're doing right now is coming out and saying the FAA is saying we're safe, guys, and the data shows that we're safe. I mean, even if that is their position, and even if that is their opinion, that the analytics and the data and all of the stats show they're safe, don't they have to still just understand public sentiment and come out and do something?
Okay, then show us the data.
Yeah.
Let us know what happened with that October plane crash from that crashed in Indonesia. Show us the data. Don't tell us. Show us the data. Because when you see China, Singapore, UK, Australia, Malaysia, Mongolia, Ireland, France, all ground those planes because of their fear for the uncertainty of those planes, and the human condition is part of that. But then the FAA and Boeing comes out and says, no, there's nothing to see here. No, I'm not just gonna accept Boeing's word for this when 2 planes have crashed in the last 5 months. Come on, come on, you're better than that.
It's not just Boeing, by the way. The airlines are all getting beat up. ALK, Alaska Air, leads the list lower of the big ones that I track, but United Air and all of them, they're all kind of down here. Obviously, just under pressure.
And Tim, all of those airlines, United, American, Alaska, all of those, guess what planes they have? The Boeing, the Supermax. Delta, DAL, also, not getting beat up today, Tim. Guess what Delta doesn't fly? The Boeing Supermax 8.
Mm-hmm.
So
that's interesting. Yeah.
I'd stay away from all airlines right now.
Let's move on to the Dow here and continue to work through the markets one step at a time, like we do every day here on the Halftime Report. And by the way, if you're out there watching and listening, always give us a like and a share. We like getting the word out there, bringing new people into our community. Matt, as I look across the leadership on the Dow, I mean, it's obviously in Apple Computer, number one, breaking above 180 again. And the Dow had that deeper retracement, but we're seeing unique stocks that are running. Boeing's going to hold the performance down. Apple here breaking out, and they announced, I don't know if you caught the news on this one. They announced some new streaming service to compete with Amazon Video, and they're moving into some of that content. Do you think that they can win in that space?
I don't ever bet against Apple, but I mean, they got a late start to that space.
Yeah.
Same thing with Disney. I mean, Disney had a chance to beat Netflix, right? They chose not to. They have a late start in that space. It's going to be tough to compete with Amazon and Netflix regarding the online streaming.
Mm-hmm. Yeah, they've got the money, they've got the cash. If they want to spend, they obviously could. They're in a good position to start doing some things like that aggressively and buying content, but I don't know if it's in the company's mindset to do that. There's a reason why they got $230 billion in cash and Netflix borrows money, right?
Yeah.
They're different business models. So interesting. I mean, it is breaking.
I would not bet against Apple.
Yeah.
And it's Apple, for crying out loud. If Apple wants to do something, Apple's going to do whatever they want to do. From a technical perspective, that broke out yesterday, confirmed, and it's run Forrest run at this point.
Visa and American Express are the ones really running today, top 2 gainers on the Dow. And when you see credit card companies moving on the backs of the CPI report and good economic indicators from retail sales and even a good unemployment report on Friday, well, mixed, I would say, on unemployment. But these things are breaking into new highs, Matt. They've been juggernauts. What's your read here?
Breakout confirmation, it's running. I mean,
Yeah.
a lot of people, they see this and they say, oh, I wish I would have bought there. I wish I would have bought there. I wish I would have bought there. Oh, no, I wish I would have bought at the very, very low point here. And now it's just too far. It's too high. It's too pricey. And it's just like, what are you guys talking about? You have no education. That is a breakouts run.
Yeah. Looking at the losers, obviously Boeing's going to lead the way. United Tech, 3M, some of the materials types companies, JP Morgan, even the brokers, JP Morgan and Goldman Sachs are stuck in the mud. Not much to see there, though. The markets are pretty flat outside of some of the major ones we've already talked about. Let's move on to the NASDAQ, if we would, and the NQ contract.
One last thing on the YM contract, Tim. Remember what we said yesterday in ranking those indexes, S&P, Russell, NASDAQ, all above the YM right now. And a lot of it, this downward movement in price when the market is up, it's really not mixed. It's Boeing. Boeing is the concern in the Dow right now. It's and again, 9th highest market cap company in the Dow, but the 2nd highest weight in the Dow index. That's that's Apple and Boeing dependent.
Yeah. And definitely when you only have 30 companies, you can run into situations like that, which is why some people prefer trading the S&P. If they are trading the indexes directly, I still like the Dow. I love the large cap leadership. I know Boeing has held them back
it's
here
just Boeing.
a little bit. Yeah, for sure.
Just Boeing.
Moving on to the NQ, if we can here, NASDAQ 100. Tech leadership is impressive to me. Google, Microsoft, many of the other names, Matt, this is a breakout, but now we're approaching a new resistance point. Are we ready to move this up to the #1 index right now in terms of ranking?
Oh, it's close. It's a hair between the S&P and the NASDAQ right now.
Yeah.
That breakout to 7,200, that's a legit breakout, Tim. I'm not concerned about that.
Mm-hmm.
The next target for me would be in the 7350, 7360 range. If this breakout does confirm, that price target has to be up another 100, 130 points.
Yeah, I'm looking across some of the names in the NASDAQ here today. Tesla is again in the news.
It always
seems like
is.
every day they're in the news. They were down 1.6% on a lowered price target from Morgan Stanley. Analysts are coming out and ranking them. I know it's
what they lower their price target to, do you know?
This is, let me get it, 260.
260. Huh?
Thanks. Basically what they're saying is we expect a little bit of support bounce here.
Yeah, cowards.
I'm seeing this bearish, frankly. I'm not trading it yet because Tesla is so erratic and so hard to trade lately. I mean, even for the last year and a half or so, I know there are traders who've had success just selling credit spreads deep out of the money, both sides, Matt.
Mm-hmm.
What's your read on Tesla? Do you even have
That's the absolutely only way to approach Tesla. Yeah. I am not confident in analyzing Tesla and what it's going to do because it's completely irrational. It does whatever it wants to do. It doesn't care about what the market does. And a lot of it is just dependent on Elon Musk.
Mm-hmm.
Oh, by the way, he is now claiming that the SEC is minimizing his First Amendment rights.
I saw it. It's so stupid.
So stupid.
Yeah, literally. Listen, Elon Tusk, why don't you get back on Twitter and let us know how you feel?
Yeah,
I'm sure they're really restricting you. Yeah, come on.
Yeah,
when
Elon,
you manipulate markets,
manipulate the market. Elon.
That's right.
Come on.
Yeah, that's right. You know, as I look across the NASDAQ, Matt, probably the most important, they're not the biggest performers, but they are strong here today. And based on the size, I think they're notable. Google, Microsoft, and AT&T are all up pretty good here. Facebook also extending its gains. We're getting leadership out of the top of the NASDAQ, which was not the case there for a bit. Facebook kind of pressing resistance. Google looking fantastic. AT&T rallying back, but now into a resistance. When you see leadership at the top, Matt, that gives you some encouraging mindset in terms of how this thing could rally from here. But I know now we're overstretched on a couple of these. What's your read on the overall?
Well, on Google here, you're overstretched a little bit. You are coming into a resistance zone at 1200. I think traders may want to start adjusting stop losses if they were, trading Google in that capacity. But you got to love the momentum of the last 3 days in Google, Tim. Mm-hmm. I mean, it's very, very impressive when you snap back retracement into 1125, kiss that 20-day moving average, and then you go up 75 points over the next 3 days. I mean, that's momentum. Momentum carries until it doesn't. And so I'm not going to be the trader that says Google is just going to stop momentum because it's kissing a resistance level. It might slow down a little bit, but you got to love the momentum behind Google right now. And with the NASDAQ breaking out, with Google showing momentum, yeah, I think you got to have a lot of confidence in the NASDAQ in the short term.
Take a look at MNST real quick. I mean, they're down here today. They're on the NASDAQ as well. Beverage company, they had a huge earnings report. It was incredible. They blasted out. They had a runaway gap. This news today was a downgrade by an analyst, Matt, which quite frankly, now it's actually set up even in a more specific technical catalyst zone, which is the old resistance. When you see an analyst downgrade, do you kind of just see it as a one-day thing and then move on? Or how do you take that?
I get really upset because they ruined a really good trigger on Monster. That's what happens when an analyst, after a support bounce, trying to confirm, which would set up a really good trade, and some analyst in some dark room somewhere who probably doesn't know what they're doing says, no, we're going to downgrade Monster for some whatever reason to justify our job. So yeah, it ruined a really good trigger, and you got to wait. You got to let it set up again. Yeah,
I agree with that.
It doesn't change the trend. It doesn't change the pattern. You're still coming into the old resistance point right here at 59.50. So it just you got to be patient, let it set up again. Give me a doji, give me a confirmation, and then you can go again. But yeah, it did ruin whatever trigger anybody had set up to come in above yesterday's high.
Yeah. Yeah, I'm seeing that as well. Let's look at the RTY if we would here. Obviously, tomorrow night, we're going to be talking about our Condor system. Every month, we have our mastermind group where we discuss the Iron Condor on the RUT. Coach Tyler's going to be there on Wednesday night. Matt, it's dojiing here. You know, it's not having nearly as much performance as some of the major ones. What's your read on small caps?
I actually really like the pattern that developed. I think it's a good pattern to issue bull put spreads on the Russell 2000. I'm not really concerned with the small range candle. It is coming into a little bit of resistance. You can't rank this above the S&P and above the NASDAQ at this point, just simply because the NASDAQ's breaking out and the S&P is threatening to break out. But I still like this pattern. I mean, just because it's a small range candle on one day doesn't mean this pattern is null and void. It's still a good time to issue bull put spreads.
Mm-hmm. Yeah, I think that you can do both sides of it. The problem is on the call side, if you are bullish on the market and if it does break and run,
which I am.
Yeah, the call side could be up for debate here. I know a lot of traders who don't even think about it. They're not trying to time one way or the other. They just do the neutral strategy and just go boom, put it out there at
There's nothing wrong with
65
that.
days. There's nothing wrong with that. I'm still debating that call side. I got to be very blunt. I'll make that decision probably by tomorrow. When I start putting that trade together for the
You don't want to issue the call side off a support bounce. You want to issue the call side off a resistance bounce.
Mm-hmm.
And so when you just had a support bounce just 2 days ago, and now you're in the middle of the range between this support level at 1525 and this resistance level at 1600, with the market being bullish, the most likely scenario is that the Russell at a minimum should come into 1600. So for me, I would wait for that to see how the market responds at 1600.
Yeah, I'm with you.
On the bear call side.
I agree. I agree with that. Let's move on to the dollar if we can and talk currency markets as we're working through our daily routine here. A little pullback developing, Matt. Failed to break out that 97 top and hold. Now we're 3 days down. Might just be pre-Brexit anxiety. What's going on here with the USD?
Oh, it's all British pound.
Mm-hmm.
I mean, you don't really need to look at this candle, this wide range candle, still a narrow body candle, slowing momentum at a support level. Discussed that, by the way, fairly accurately in the Forex report this previous week. But it's really just the British pound and what has happened with the British pound in the last 12 hours, Tim. Look at the volatility that the British pound has had since yesterday. I mean, you're talking about honestly a 300 pip range in a currency. I mean, that is a massive range in a currency. And so you got a lot of uncertainty in the currency market regarding Brexit, whereas Brexit doesn't really impact equities in the US right now, right? There might be some risk we're not pricing in there.
Mm-hmm.
And I certainly understand and accept your point. But in the currency market cares a whole lot about Brexit right now. And, the British pound is just going very, very volatile. I'm waiting. I'll tell you that on the dollar, I'm waiting till after I see Brexit, till after I see that vote to kind of really determine what I want to kind of look at with the dollar over the next few days. You do have a really important support level on the intraday forming here at 96.92. It's in this cluster of old range candles right there around 97. So any trade on the dollar intraday or from a day trading perspective post Brexit has to start with understanding where these support and resistance zones are. And from an intraday perspective, you do have this intraday support zone at 96.92. You have an intraday resistance zone right around 97.10 with a very important intraday resistance zone right around 97.30. So those are the levels I'm tracking post Brexit to justify what I'm going to do with the dollar for the rest of the week.
Two of the most important mandates from the Federal Reserve is to keep employment at full capacity and keep the unemployment rate as down as they can. And the other one is to keep inflation under control. The CPI report came out today, Matt, and it was up 0.2% as expected. It was in line. When you exclude food and energy, it was up 0.1%. I think inflation pretty much is where they're reporting it, is where they're expecting it. Now, first of all, what was your reaction to the inflation report, and was there any takeaways you had?
Couple takeaways I have with the CPI report today. CPI report obviously came in at 0.2 versus the expectation of 0.2. Core CPI discounting food and energy came in at 0.1% versus the expectation of 0.2. Nothing to really see in those numbers. So you got to look kind of deeper at the numbers. Year over year inflation, Tim, and this is a very important number for what the Fed is going to do, whether you agree with it or not. And just for the record, I do not agree with it. I do not believe the CPI report is actually a true representation of the inflationary impact to consumers in America. So let me just put that out there. But that's not what the Fed cares about. The Fed cares about what that CPI report is. And year over year, Tim, inflation only grew at 1.5%. Again, not my experience at the grocery store, not my experience in housing, not my experience out there in the market, but in terms of the Fed justifying monetary policy, when you come in at 1.5% year over year, that gives the Fed all the ammunition they need to remain patient in their approach to the market. So the economic data came in really positive for the Fed, and that's what the market wants to see. The market wants to see the Fed stay with a very, very low interest rate environment. They want to see a reduction in interest rates. That's what they always want to see, right? It's the same. The market wants to see the exact same thing as the president, and it doesn't matter who the president is. They want to see markets go up. Period. End of sentence. Right. Mm-hmm. And so with the market seeing this CPI report coming in at 1.5% year over year, that again gives Jay Powell and the Fed cronies all the ammunition they need to justify what they have been doing in the last 2 to 3 months. If you look at some of the individual components of the CPI report, food up 4%. Food up 0.4% month over month. Gas up 1.5% month over month. Shelter up 0.3% month over month. All of them were far exceeding what the actual CPI report was. So if you look at some of the individual components, and especially the food index, Tim, up 0.4% month over month, which is the largest monthly increase in inflation since May of 2014. But the market's not going to break that down. They're just going to look at the actual CPI report and say the Fed is justified.
Yeah. And right now, I mean, obviously they're just trying to read cues into what Jerome Powell's going to do. And I think we've identified what Jerome Powell's going to do. He's going to change his mind into whatever he wants to do whenever he needs to affect the market. Fed positioning and Fed statements, Matt, they've been fascinating the last 6 months. As we move forward, they seem to be soft, and I don't see that changing anytime soon. It's not like they're going to start raising interest rates. There's no data that suggests it.
There's nothing that suggests they're coming off this. Anything that starts with they're coming off this starts with the belief, and I mean this, the belief that Jay Powell is truly a hawk that is painted into a corner, that is forced to act this way against his own desires. And that's just completely conjecture and speculation on anybody's part. And so you got to take them from what you're seeing in the markets. You got to take them for what you're seeing in the market reactions, and you got to take what Jay Powell said. And ever since really, December 26th, Jay Powell's been very consistent. We're coming off interest rate hikes. We're coming off the balance sheet, and the market's starting to price in perhaps a higher probability of the reduction of interest rates coming into later 2019 and 2020. So you got to go with it. You got to go with flow on that, even if you disagree with it.
Not a lot going on in energy right now. Crude oil sitting near resistance, has not broken out one way or the other. Kind of a quick update here, Matt, just kind of compressing. The weekly inventories tomorrow could drive something, and maybe the Brexit vote too, because if the dollar moves, commodities move. So there could be catalyst here in the next couple of days, but until then, we're sitting hanging out in a range. Let's take a look at metals. Gold, silver, platinum, copper, and palladium all higher today, but gold sitting specifically underneath that $300 or $1,300 per ounce handle here until we break back above there. You can't really buy, as I'm looking at the gold markets.
Look at wheat. Ooh.
Yeah.
Can't touch it, but that was just, up 23, up 5%.
That is crazy. Yeah.
I'm doing up 5%.
That's a look at
soybeans. I'm still waiting on soybeans. I'm still waiting on soybeans. But when you're looking at the metal market here, obviously the same conversation we've had yesterday, this 1,300 level is an important zone that gold needs to recapture before any discussion of bullish behavior is to be had. And that's not from a daily perspective. That is from a weekly perspective, you got to reclaim that 1300 number before I even think about short-term anything on gold. With silver, silver's been underperforming gold quite a bit, and I just do not like anything in this silver chart right now, Tim. Double tops, M formation, breaking of support on strong volume with a big red candle, snapback rally coming back up into 1550, forming a kiss of death type situation. There is nothing to like here. If you're a silver bug, there is nothing to like on that chart right now. So gold, and we've been all over gold. We've liked gold ever since the October bottom, far more than we have silver. Silver is not an inflationary protection. Silver is not a safe haven status. It's a currency protection when you own physical, but it's not a protection against inflation. Just look at the price of silver for the last 35 years, and you can fully understand that silver is not an inflationary protection. It is gold that is an inflationary protection. It is gold that is the safe haven of those two precious metals. So in looking at silver, and by the way, I own more silver than gold from a physical perspective. Okay. So I do like silver from a physical perspective. I'm just talking in terms of the short-term analysis here. But yeah, the silver's looking really, really ugly. Gold has to reclaim 1300 before you have any discussion of potential trading opportunities. And even at that, that's more long-term stuff. That's not short-term trading in that capacity. When you're looking at the other metals in platinum and palladium here has been the favorite of the market from a precious metal perspective for a very long time. This pattern right now was forming a little bit of a retracement. I see this much more as a high base type situation. And so if you're waiting for any trade on palladium, it's got to start and end, in my opinion. Other traders might disagree, but it has to start and end, in my opinion, with a breakout of 1526 on palladium. On platinum has not performed the same as the other commodities have over the course of the last 6 months. You can see this deep retracement here on platinum. I actually made an argument to put platinum in the commodity report as a tradable instrument, but even I was like, that's too deep and too violent of a retracement. You do have fairly significant resistance that it's hitting its head on right here at 836 by 840. So if you're ranking the metals, right, you got to go palladium 1, and it's not a close second. Palladium 1, gold 2. I would put platinum 3rd right now, and followed by silver last. Yeah, I forgot copper. What's copper? HG, right?
Yeah.
Okay. Copper here, I actually really like right now.
I love the pullback on copper, and I love the metals in general. You know what's hard is that I think fundamentally I like gold the best, but technically it's not in my top 3. So you got to play what you see. As a trader, investor, it's a different mechanic. If it goes back above $1,300 though, I mean, there's going to be clear error there, and I would buy gold again as a trade. But until then, I think palladium and copper and maybe platinum are all better. Yeah,
I from a trading perspective, I like the chart on copper the best. I like the breakout on palladium the most if it does confirm. Gold, I don't see a short-term trade on gold. The investors and the position traders will like the reclaiming of 1300. Silver is a very, very distant last.
Yeah. Markets are stalling here as we're hitting our 45-minute mark and getting into our feature presentation. But, it's kind of just a Tuesday carry through. The big story is really just Boeing, quite frankly, today on the Dow and bringing things back down on there. I will say this, Matt. If people use the option report this week effectively, some of those bullish plays could have paid for years of Tackle Trading's Pro subscription.
They really could.
I mean, Microsoft, just crazy. Take a look at Shopify real quick, and then we'll get into our feature. Shopify literally in 2 days, one of our option report picks, just blasting out.
I believe the first target was 202, and it's blown through that.
There's a reason every analyst that I've ever brought into Tackle Trading has always recommended I raise prices.
It's true, but
there's also a reason I've told every analyst and consultant who's came into my company to evaluate my company that I've told them to go to hell.
Yeah. Well, I mean, we have a vision. We want to provide financial training and education at something people can afford.
My stance is very, very clear. If you're going to provide education to the masses, you have to make it affordable to the masses. Period. End of sentence.
Yeah. There's so many good candidates here, Matt. Visa, I mean, literally is at a target. Microsoft went nuts. There's so many things that you should be either profit taking or trailing on here today. Pan W is one of my favorite trade setups, and it still hasn't hit a target yet. That one actually just confirmed and showing me strength. But one thing we wanted,
real quick, Tim. Sam, an ETF, an index ETF that you can trade, invest, it's not very liquid at all, is CPER.
I just dropped it in the chat.
Thank you.
So much action. Traders market, Matt, stock pickers market. There's no question. I see good candidates on my bull list, on my bear list, and commodities, waiting on clarity out of Brexit, but there's always something to do here. One thing we wanted, and we do this with our halftime report, we have themes that we kind of identified on a day-by-day basis. Monday, we do our market prep, with our sectors and all that kind of stuff. Tuesday, we do our Delta Tuesday. And Delta Tuesday can encompass anything to do with the Delta market. One thing we decided in the pre-production show was to use Delta as a way to teach probability. And probability of touching or probability of expiring is very different. We have two candidates that we're going to go through, Coca-Cola and Tesla, to kind of frame that expectation, kind of set that up and talk about it for a few minutes.
Well, number one, Delta does a couple of different things. Number one, Delta defines the percentage of what you will capture given a $1 movement in a stock price when you are a buyer of an option. So if I go out to the market in Tesla, and let's say I want to buy a 0.60 Delta right there, I'm going to pay, $3,825 for that contract, per contract. Well, what Delta defines is that per a $1 movement in the stock. So if Tesla goes from 283.29 to 284.29, for example, the value of my option does not go up $1. The value of my option actually goes up at the rate of Delta, which is 0.60. What gamma does is it therefore tells us how fast Delta will move. So if the gamma is, say, 10, so I'll take off the probability of touch real quick, Tim, and I'll just go back to, where is my deltas here? There we are. Okay, so gamma here. So what the gamma suggests, and there's no gamma here, but what gamma suggests is that this Delta per $1 movement will move at the rate of gamma. So basically, Tesla has to move a lot for it to actually be impacted by Delta or by gamma. So Delta defines, number one, the percentage that we're going to capture as a trader when we are buying options given a $1 movement in the stock. That's number one. As a seller, since we will never hold options we buy into expiration, as a seller of those options, which we will, Delta also defines the probability that that strike price will finish in the money. So if I buy a 0.60 Delta on Tesla and it's it says 60, that tells me there's a 60% probability that Tesla will be above $275 in 101 days. Now, again, as a buyer, we would never hold through the theta risk of the last month and a half, 2 months. So as a buyer, we don't consider that to help us out in probability. That is always done from a technical perspective. But from a seller's perspective, when you're doing covered calls or credit spreads or naked puts or any theta type positive strategy, Delta helps you understand the probability that you will successfully cash flow on that vehicle on a monthly basis. So if an option finishes out of the money, that option finishes at zero. If you've sold that option, you get to keep all your cash flow. So for example, if on Tesla here, I come out and I sell a naked put, for example, at 180, right? Well, what the market is telling me, and this is something that's very important for traders to understand. What the market is telling me is that I have a 90% probability of simply cash flowing on that position. Well, if I have a 90% probability of cash flowing on that position, I have a 10% probability that I will have to buy Tesla, at expiration, for example. Okay, so let's drop this down to a 37-day contract. Now, for new traders, that's important to understand that Delta defines probability. But for veteran traders, we also know that Delta is not an exact science because it defines it at expiration. but there's 37 days left in this contract that the market go up and down and up and down and up and down. So one thing that it could be very helpful to understand is also adding a column called probability of touching. Now, what the probability of touching states is that at any point in this time frame, 37 days, you have that same 10 delta right here at 215 now, you have a 90% probability of cash flowing, but there is a 29% probability that that strike price is going to be hit at some point within that 37-day contract. And as veteran traders go, we all know that that's where the risk truly lies. It's not at expiration. It's the decision making we have to make when those strike prices are hit 29% of the time. Because a lot of times when it does get hit, if we don't do something, we're talking max risk type scenarios. So yes, I have a 90% probability of successfully cash flowing at expiration, but I only have a 70% probability that at some point that strike price at 215 versus the current price at 283 is going to be hit. So that might make me a little shy with doing something like this on Tesla. You take another stock like Coca-Cola, which is not as volatile, and you look at that exact same scenario where we're selling a 10 delta here. So we're selling a 10 delta on Coca-Cola. Once again, that exact same probability of 90% successfully cash flowing if I sell that naked put at 43 versus the stock price at 46. However, there's only a 21% chance that Coca-Cola will actually hit 43 in the next 37 days. So I just wanted to do a very quick little just understanding the difference between delta defining probability at expiration versus the market actually seeing those strike prices get hit within that time frame of that contract, and that is what we call probability of touching.
Well, and it sets up so many different implications on equity curves and drawdowns. Just think about it out there if you're a trader. If you set a stop loss 1/2 ATR from the strike price, even if you have a 10 delta, it doesn't mean you're going to have 90% win rate. You shouldn't expect it. So if you have your results come in and you've got a 70 or 80% win rate, that's probably more of what you should have expected. And I think in life, Matt, proper expectations are so important for us to have success. Because if you think you're going to be right 9.5 out of 10 times, but you're not, maybe you think you're doing something wrong, but that's actually maybe just by design. You know, the POT is a very effective tool there. Awesome job on that. There's quite a few stocks. Go ahead.
Oh, I was just gonna say, when you're looking at, say, the indexes or anything, you can kind of do the exact same thing. You know, we start by issuing bull puts and bear calls at a 10 delta, right? You got these 10 deltas right here, but you have a 22% probability of touch. What we really see in the cash flow condor system is you have about an 80 to 85% probability of cash flow.
There's a bunch of stocks flashing on my list, but we've already hit many, many, many of them. And the only thing I would tell everybody, go watch the stock and option report and double check your watch list. I will remind everybody as well, on Thursday this week, we have Broadcom, Oracle, Adobe, Dollar General, Ulta Beauty, and DocuSign, which are commonly watched and traded companies on our reports. That they're on my watch list. They'll have earnings. So double check on that, Matt. Twillo here, what a breakout.
And just to answer Sam's question, when you see a breakout like this off the retracement and you have momentum going into that, you want to give your stocks a chance to run, guys. You don't want to be too quick to lock in profit when the analysis says you have momentum behind you, when you have clear selling behind you, when you have no resistance in front of you. And so for me, coming off this retracement, for me, when you see a scenario like this, it's about where you adjust stop losses. The conversation should not be, should I lock in profit off a big momentum when you're just breaking out?
This day, 1933, as the Great Depression was up and running, FDR did his first fireside chat, Matt, to build rapport with the nation and try to get them moving in a more positive direction, communicating directly through radio. Can you imagine a world where you're sitting around the radio and listening to the president, and that's the only outlet you have?
What are you talking about? We do that now. It's called Donald
Trump's Twitter.
Yeah. Railing against technology this morning. No, I could not imagine that. I mean, we were children of the 80s and 90s, and I could not imagine an environment even in then where you sat around having fireside chats with the president over radio.
Mm-hmm.
Kind of makes me long for those days, to be honest with you.
Well, and part of it, quite frankly, was tied to the market because they had bank closures and they had gone on bank holidays, and he wanted to assure people that everything was going to be fine. So it wasn't just a fireside chat and telling stories. He was trying to calm investor nerves and public nerves about what was happening in the banking sector at the time.
Well, and obviously communication was not as fast as it is today, obviously. FDR did so many good things, and I'm not going to get into the debate on what he did or didn't, but FDR was an amazing president.
Awesome. Coach's show tonight, mastermind group tomorrow. We will be back with the halftime crew every day this week and every day the markets are open. Guys, if you're halftime crew, give us a hashtag team tackle in the chat. Always a like and a share is something I'm going to ask and unapologetically ask for it each and every week, Matt, and each and every time we have this show. Any last thoughts, brother?
No, excited for the coach show tonight. Excited to be with the crew here. I will not be here the rest of the week, Tim. You will have, I'm sure, a range of guest hosts from Noah or Mark or Frank or whatever tackle coach wants to show up. But I will be down in Orlando speaking for the amazing Legacy Education. I'm excited to go down there and represent Legacy. They're a company you and I have been a part of for a very long time. They're one of the best in the world, and I'm very, very excited to represent them.
Yeah, absolutely. Cody, great job, kid, putting all the prep and all the work together. I appreciate you, and I know that you're getting ready to put some of these highlight videos onto our YouTube channel. If you're watching this, one last call to action. If you haven't done it yet, subscribe and like it. And if we're watching the replay later, put something in the comments. We always do like that. Great job, Matt. Great job, Cody. Great job, team. We'll see you tomorrow in the halftime report.